Banks will be forced to make it easier for home borrowers to shift lenders as auction clearance rates rebound. The share market has turned into a barbell market with big winners, big losers, and not much in between. And China says relations with Australia are back on track. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 17th of June, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, banks will be forced to make it easier for customers to switch loans and notify them over interest rate changes under a whole bunch of government proposals that are aimed at easing some of that pressure on homeowners.
Treasurer Jim Chalmers said banks now will be required to always tell customers when their interest rate changes on their transaction or savings accounts change. There will also be improved disclosure requirements for basic deposit products, and banks will also need to make it easier to switch loans by ensuring their customers have direct and easy access to the forms needed to exit a mortgage. The reforms are also targeted at other platforms, such as comparison websites, which must better disclose what determines how products are ranked and the financial relationships they have with recommended product providers. It is all about trying to make it easier for homeowners who have a mortgage to shift products. The government has also announced a regulatory review focusing on the funding costs of small and medium lenders. The big four banks have cheaper funding sources currently due to different capital rules, higher credit ratings. Also, people kind of assume that they'll be saved by the government if there's a financial crisis and one of the big four goes bad. They expect that the government will step in. That's not the case with the smaller guys. Therefore, their cost of funding is a bit higher. It means that these regional banks, smaller lenders, find it really difficult to compete. And Dr. Chalmers wants to improve the competition within the lending sector. More competition, of course, more winners for customers.
Yeah, no doubt many people would like to see a little bit more competition in the housing market. Mind you, though, plenty of homes are still being sold.
Sure are. There was a bounce in the national auction preliminary clearance rate over the weekend to almost 73%, the best result since early May. And that came even though there were 900 more auctions than the previous week, and the number of properties going under the hammer was 15% more than a year ago. That's all according to CoreLogic. Melbourne had most auctions, and its clearance rate, or its early clearance rate at least, of 70.2% was the best since the first week in May. Sydney came in at 75%, Adelaide a touch under 89%, and Brisbane was almost 69%. This strong demand is helping prices, with CoreLogic's measure of prices over the past 4 weeks up a very solid 0.8%. So while the government is stepping in to make shifting between borrowers easier, to make sure that the smaller lenders have a fairer playing field, at the moment doesn't seem to be stopping consumers from taking out mortgages and buying homes.
All right, let's take a look at local markets. How did things finish up on Friday?
The S&P ASX 200 closed down 0.3% to 7,724 points for the week. It was down nearly 2%, mostly in the back of the mining companies going the wrong way. That was the biggest weekly loss in almost 2 months. Now, the retail stocks were the best performers last week. If you take a look at what's happened this year on the market, it is very, very mixed. The technology index is up 25% in 2024. Quite remarkable. It reflects the incredible performance of tech stocks on Wall Street, particularly anything related to data centers or artificial intelligence. Then there's this second grouping of very strong performers, the indices measuring interest rate sensitive stocks, including financials, utilities, real estate, consumer discretionary. They're all up around 9, 10, even 11%. But at the other end of the ASX is the materials index. Huge index, that one. It includes most of the big miners, including BHP, Rio Tinto and Fortescue Metals Group. The energy index, think Woodside, Santos, AGL, some of those guys, that's also tumbled, as has the telco index, which very much depends on Telstra. So the ASX 200 itself is up 2%, almost 2%, but really it's a barbell market. You've got the good, you've got the bad, and not much in between.
I imagine you have a great deal of experience with barbells from your time at F45 Fitness.
Oh, I'm so pleased you mentioned that. I probably have to hasten to add that about 4 weeks ago, I decided to give it a break for winter, Michael.
Oh, really?
Yeah.
You know, Sean, summer bodies are built in winter.
Yeah.
I read that slogan the other day and I'm like, nope, no chance.
Not a chance. Oh, we went for 18 months and I have never been fitter. But alas,
Is it just decided to have a bit of eating time?
Yeah, eating, drinking time. Just for a few months, not too long.
Oh, that's good.
Yeah.
Oh, well done. You know what? We've gone well off track. But yes, noted, the market is now about a barbell market.
It's a barbell market. Thank you. Yeah.
Now, Sean, checking international markets thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. What's happening in the US?
Well, consumer confidence data shows a third month of falling sentiment. The recent run of economic data in the world's biggest economy has very much supported hopes that inflation is returning to more sustainable levels. And while the Fed last week said its base case is just one rate cut this year, investors seem to be looking past that. Wall Street is buoyant, with the S&P 500 and the tech-heavy NASDAQ trading close to record levels. In commodity markets, Brent crude is trading around $83 a barrel. Gold's just above $23.30 an ounce. Iron ore has rebounded a touch and is fetching $107 a ton. Bitcoin's worth $66,000 a unit, while the Aussie dollar is buying just over 66 US cents.
Sean, speaking of the US, it is, of course, a very, very big year for the US, isn't it, with the presidential election later in the year. And you've got a fantastic interview this morning coming up after the show with Dr. Kevin Hebner, Global Investment Strategist at Epoch Investment Partners, based in New York.
So we talk about what's going to happen if Donald Trump wins the election, what's going to happen to markets, what's going to happen to tax reform, etc., what's going to happen if Joe Biden wins the election. Now, Kevin has great insights into what the political economy means for the real economy, and what it might mean for, sort of corporate tax rates and inflation, and what it means for markets like Australia as well. So it's a fascinating chat.
Yeah, it sure is. It is coming up after the show, so stick around for that one. We'll be back in a moment with the rest of the day's business news. Sean, the relationship between Beijing and Canberra is back on track, according to Chinese Premier Li Qiang, who will today meet Prime Minister Anthony Albanese.
Mr. Lee's visit is the most senior ministerial trip to Australia since 2017 and started in Adelaide over the weekend. Mr. Lee said shelving differences had helped get the bilateral relationship back on track after a period of twists and turns. In a statement, he went on to say that China stands ready to work with Australia. A more mature, stable and fruitful, comprehensive strategic partnership will be a treasure shared by both countries. Foreign Minister Penny Wong said the visit was the culmination of 2 years of diplomacy to bring about a stabilisation of the relationship. Trade and Tourism Minister Don Farrell rejected suggestions that Canberra had kowtowed to Beijing. And of course, there was a bit of panda diplomacy as well, with South Australian Premier Peter Malinauskas saying the announcement that 2 pandas will replace Wang Wang and Fu Ni at Adelaide Zoo. Well, he said it's a big deal.
It is a big deal. I love the panda diplomacy thing. Do we swap something? Like, do we send like over a couple of bin chickens or something?
I'm thinking koalas and kangaroos. You're thinking of ibises.
Yeah, well, they're natives.
They are natives. And
But
it
seriously-
would have been lovely.
Oh, Beijing would be feeling ripped off. They go to the zoo and like, what is that? It's
Oh
just
my
picking
God.
through the bins. Like, yeah, okay, maybe koalas are better. I'm not a born diplomat here, Sean.
No, obviously.
Now, the Reserve Bank Board commences a 2-day meeting today, which culminates in its announcements on interest rates tomorrow, but no one expects any change in rates.
It will be 5 policy meetings in a row without a change, according to both market economists and bond investors. No doubt Reserve Bank Governor Michelle Bullock will say nothing is ruled in and nothing is ruled out when asked that very question in the press conference tomorrow. Bond markets have priced in a rate cut by April next year. It says there's a 30% chance of one this year. 3 of the 4 big banks still think there could be a rate cut some point this year. But I've got to say, most of the market economists are now pushing out the timeline, many into next year. The central bank is contending with a slightly inflationary federal budget. Why I say that is because when the budget was handed down in early May, there was plenty of debate over whether it added to inflationary pressures, something Jim Chalmers, the Treasurer, said it didn't do. An internal document from the Reserve Bank, released under a Freedom of Information request, shows that the Reserve Bank economists, at least, think the budget is slightly expansionary.
And certainly worth tuning into Fear and Greed the week ahead, featuring our resident economist, Stephen Koukoulas. It comes up straight after this episode. He's always very much worth listening to, his views on what the Reserve Bank does.
Yeah, absolutely. We talk about the numbers from last week, which is the labour force numbers, and then we talk about what's coming up this week. Of course, the big news this week is the Reserve Bank meeting. Probably less about the actual interest rate because no one thinks that's going to change, but certainly Stephen's interested in what the Reserve Bank has to say.
Yeah, indeed. All right, now Bitcoin, Sean. Very exciting. Coming to the ASX with the first Bitcoin exchange-traded fund marketed by Van Eck to debut on Thursday.
The Van Eck Bitcoin ETF is the first on the local exchange, and it will track the price of Bitcoin, which is far and away the most widely held and actively traded cryptocurrency. One of the world's biggest investment management companies, Van Eck's local boss, Arian Neron, is quoted in the media saying that Bitcoin is an emerging asset class that many advisors and investors want. The approval comes 6 months after the US Securities and Exchange Commission approved 9 Bitcoin ETFs over there. For many retail investors, it makes investing in Bitcoin just much, much easier because they can go and buy and sell the ETF on the share market, just like they're trading BHP or Commonwealth Bank. So it actually just, if nothing else, it just makes trading a lot easier for people.
Yeah, and of course, we are certainly not an investing podcast. You should seek professional advice before making investment decisions. Sean, AGL Energy has warned that the investment case for new wind and solar generation is, quote, tricky, and that the group will instead focus on hydro, gas and batteries.
Yeah, the comments came after rival Origin Energy said it would minimise its solar and wind asset ownership and focus on renewable energy purchase contracts, rooftop solar, batteries and gas. Of course, AGL and Origin are going through this transition stage and they haven't really made it clear how they're going to get there. So this is all part of that. AGL's Chief Operating Officer, Marcus Brockhoff, said AGL would also ramp up its direct investment in energy firming assets, specifically hydro. He told the Financial Review that AGL would invest in everything from batteries to pumped hydro facilities and gas-fired power stations. The investment case for solar is tricky because their peak power generation times during the day coincide with the lowest demand. Wind generation is similarly tricky because revenues are relatively low. He said hydro is undervalued when it comes to the energy transition as it opens up deep storage capabilities for the energy market, plugging a gap that has plagued the renewable sector as the development of large-scale batteries they're floundering, really. It just hasn't kind of worked as people had hoped. And that's why hydro, which opens up these deep storage capabilities, is so promising.
Sean, according to new data from insurer Allianz Australia, in 2023, workers took an average of 76 days off work for each compensation claim primarily linked to a mental health condition.
It amounted to 655,000 days of work lost to workplace mental health injuries last year across 155,000 employers insured by Allianz. The most common cause of injury complaint were work-related harassment and bullying, work pressure, and work stress burnout, according to a story in The Australian. Now, the numbers are very similar to government agency Safe Work Australia, which puts the total time lost to serious claims for work-related mental health conditions in the economy at 589,000, or just short of 589,000 working weeks. Allianz's Chief General Manager of Personal Injury, Julie Mitchell, said the significant increase in claim volumes predated COVID-19, and it's being driven by factors including a rise in violent customer behaviour against frontline workers, reducing the stigma around disclosing mental health issues, employee expectations empowering more workers to call out bad behaviour, and the rising cost of living putting more strain on the workforce.
All right, turning to international news now, and tens of thousands of protesters took to the streets across France over the weekend to oppose Marine Le Pen's far-right National Party, which is predicted to finish first in the upcoming snap legislative election.
The demonstrators said they wanted to call attention to the Nationalist Party's policies on human rights, the environment, equal rights and economic matters, according to Bloomberg. Macron's decision to call an election was designed to shore up his support at home, but he opened the door to Le Pen taking control of the French government. Macron himself will remain president until 2027, but certainly if Le Pen is in control of the government, it makes his job as president far, far more difficult. further complicating matters for Macron, a group of 4 left-leaning parties agreed to join forces, with polls indicating that coalition of those 4 could actually become the second biggest bloc ahead of the president's Renaissance Party. A lot of strife for Emmanuel Macron at the moment.
Yeah, indeed. Now, Sean, this last story is actually really quite alarming. A disease caused by a rare flesh-eating bacteria that can kill people within 48 hours is spreading in Japan after the country relaxed COVID-era restrictions.
Cases of streptococcal toxic shock syndrome has reached 977 so far this year, higher than the record 941 cases reported for all of last year, according to the National Institute of Infectious Diseases in Japan. Group A streptococcus typically causes swelling and sore throats in children known as strep throat, but some types of the bacteria can lead to symptoms developing rapidly, including limb pain and swelling, fever, low blood pressure. That can be followed by necrosis, breathing problems, organ failure, and even death. People over 50 are more prone to the disease. This is according to a report on Bloomberg. Most of the deaths happen within 48 hours. Now, other countries have experienced recent outbreaks as well. In late 2022, at least 5 European nations reported to the World Health Organization an increase in cases of streptococcus disease. The World Health Organization said that the rise in cases followed the end of COVID restrictions. At the current rate of infections, the number of cases in Japan could reach 2,500 this year, with an absolutely terrifying mortality rate of 30%.
That's a very grim story to finish on, Sean.
It is. I'm sorry. We are ending on a very grim story, Michael.
That is all
Apologies.
right. All right, up next, though, Sean, is Fear and Greed the Week Ahead, featuring Stephen Koukoulas, as we mentioned. And then after that, Dr. Kevin Hebner, Global Investment Strategist at Epoch Investment Partners. This is a great listen.
Yep, all about what a Biden win or a Trump win in the US poll in November this year means for tax rates, global markets, Australian markets. It's a great chat.
Yeah, it certainly is. It is coming up in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you can sign up for the Fear and Greed weekly newsletter, which comes out on Wednesday. So there's never been a better time than right now to pop your email address in and make sure that you are in the queue. Well, there's not really a queue, is there, in kind of email
speak? No,
Yeah.
Probably not.
No. Oh, well, but just do it. Just put your email address in and you'll get the newsletter. I'm sure there's a more technical kind of way that it happens, but as far as I know, put your email address in and it will lob mid-morning on Wednesday. Thank you, Sean.
Thank you, Michael.
It's Monday, the 17th of June, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.